It's Andrew Pancioli here, and I want to share some information with you and look at some chart patterns that I think are really critical at this moment in time, because they do give us some clues about why we should be prepared for a potential crash. We might well be on the edge of one. And let's face it, life's pretty uncertain at the moment. There's a lot of economic uncertainty. There's a lot of geopolitical threats. Wars are escalating. There's division in the United States, and of course Europe is polarizing. So we need to be ready for some sort of areas and times of uncertainty. And I want to share this information with you about a valuable chart pattern that's unfolding. It's in real time. It's happening right now, and I'm filming this today in the morning on the 2nd of May in the United Kingdom. And I'm going to show you a couple of tools that we can use, and the idea being so that you can protect your wealth if anything does turn down. I mean, things are pretty shaky. And also, if you're an active trader and investor, you can be ready to take advantage of the situation as well. And here it is. Now let's take a look at this. Now, this is the 2020 COVID crash. I want to show you how history repeats in chart patterns. It doesn't always repeat, but it rhymes, and that's why I want to put you on alert. So what we did see here was that we had some significant high coming here based on time cycles. We had a major high in the time cycles we used. I'll show you how these time cycles work in a minute. But this is the pattern to look for. The market came down and then it made a 50% retracement. Have a look at that. It then reversed off that and crashed. And that's a very important pattern. Watch this. It comes down and it comes back up, makes a 50% retracement and crashes. Now, I know what some of you seasoned traders are saying. Well, that's nothing, not a big deal. It doesn't always crash when it makes a 50% or 61.8% retracement. But the point was that this crash was one we identified for our followers because we had major time cycles coming in, and we're seeing something very similar. Look at this pattern here in 1987. Okay, full disclosure, I know you might not believe it, but I wasn't actually about trading, although I was watching markets back in 87. And what we saw here was a major high coming in. The market came down, it made a 50% retracement, exactly like it did there in the COVID situation. And, just bear this in mind because I'm going to share the latest chart with you. It then came back, and then it came back up here and made a 61.8% retracement, from which the market came down 34%. And in fact, if we go back to the previous slide, the pandemic chart also showed a similar decline of 34%. So this is really useful information. So how can we be prepared, and what is unfolding right now? Well, I'm going to just cover the latest chart right now, but I want to bring in some cycles, some tools here. Now, what we do is we look at how big cycles come together, and we look at them and we stack them. And they're shown underneath this chart here as histograms. So where the histograms spike, we can expect or be ready for a turn. It just puts the odds in our favor. It's all about reducing uncertainty. But most importantly, basically, we're known in the future. We can see these, and in this case, I'm showing you a monthly chart, and I'm showing you some major cycles all the way through out to 2030. So the idea is that, first of all, these might change, that we do update them. And so whenever we move into this area, and we are in one of these areas right now, we need to be on alert for a major trend change. So now those of you who say, well, 50% retracement is standard, 61.8% standard, but we're cautious because we've got some major cycles coming into play, and that's exactly what we're seeing. So we need to protect our positions, and that's exactly what we've been doing over the last few weeks, especially as we came into the top at the beginning of April. That's the big picture, the macro picture. We can then take the intermediate picture, and we can look at weekly cycles. And our system is again flagging important weekly cycles here as well at the beginning. And so again, be on alert. You've got a massive macro cycle and a weekly cycle. Things are telling, markets are telling us something. And then we have daily cycles as well. So again, you can see that as we play out over the next month, there are some spikes that we need to be alert for trend changes on. And the idea is you protect your positions as you go into them. And actually, once you know how to use this information, you can then also take the other side of it. This information we publish in our market timing report, which comes out once a month. So this was published back on the 28th of March. And I want to just point out how we identified this and had you all forewarned. The major monthly cycle, so that was the big set of spikes, is still playing out. We need to be prepared under our weekly cycles for the weeks ending 5th April and 19th of April. So we are on alert, and this is all the way back on the 28th of March. And this is the weekly cycles here. So we knew that, remember, we had the big monthly cycle, we had the weekly cycle coming in here, and another weekly cycle coming in here. So we knew something was happening. So with this in mind, this is just cutting to the chase right now, just to share these cycles with you, is that we've got the high, we've got a low, and we've made a 50% retracement. We need to be on alert. This is a potential crash pattern unfolding, not just because of this retracement, but because we have those macro monthly cycles. We've got these weekly cycles coming in here as well. So this is where we're at this moment in time on the 2nd of May. Doesn't mean, we're going to get a crash, but we do need to be prepared. So just as a recap there, in the 87 pattern, we did see, so if we follow the 87 pattern, that made a 50% retracement, came back, and then it went back up and made a further retracement. But the point is that a major monthly cycle suggests a major trend is unfolding, and that can take several weeks, and hence the cycles there. And we did the very same thing back in 2020. The report was running, we had major cycles coming in there, and that put us on alert, and we had weekly cycles there, and that was all covered in our report at the time. In fact, here's exactly what we did do in 2020 for our supporters and followers. Basically, the 90-year cycle was coming in from the 1929 crash, so 2019 was an important year, and we were only 6 weeks. So 6 weeks within 90 years is a very small proportion, and we were able to bring things down to the individual day. Well, here was the 1st of February 2020 report identifying some key cycles, and as I mentioned, it was all about the 90-year cycle. But most importantly, this is very similar to what we're seeing right now. This month we have one very important long-term monthly cycle. That's the same concept. And as I write this report, we're at a tipping point. This was back, as I say, 1st of February. We have hit major resistance levels, so the market had hit a target. It had also made an overbalancing swing. And these were the weekly charts, the daily histograms showing these things coming in right here. This is what unfolded with these points. So you can see how this works. The weekly cycles were in, the daily cycles were in there, right that. And that's exactly what happened there. Of course, none of this had folded out. There was the big spike warning us for the daily cycle, and it was all together. And this is one of the techniques that we use just to catch that crash there. Last February 2020. So this shows you how this stuff works. So with this in mind, could we see a drop? Yes, we could. How much could it be? Well, in the worst case scenario, history shows that 34-35% has occurred in those two examples. So that would take the S&P down to 3,445, take the Dow down to 26,000 roughly. Okay, is it guaranteed? No, we might carry on up, but the fact that we've got these big cycles in place, we need to be prepared. The chart pattern is warning us. I hope you find this information to be useful. If you'd like to know more, either have a look at the text below, or you can find out more at markettimingreport.com. And please share this video and subscribe to the channel. And I hope you found this to be useful. And most importantly, I hope you protect your wealth, and even better still, take advantage of the situation that may unfold. Thank you again.